Good day, everyone. Before we start, we have a disclosure. Please be aware of risk in the future trading. Today is 3rd of August, 12:22. We are in the middle of the day. I want to highlight the market analyzer. The market analyzer have 3 different signals, and it has 5 different automated trade. It can be traded on the signal, or it can be auto-traded from the fib line. This is the difference between a normal auto-trade. This is a different type of an auto-trade. There is 20 auto-trade in the package, but this is a different type of an auto-trade. It's just a straightforward swing trading as an example. But the difference in here on the market analyzer, you can have the signal fire on the chart, and this one here is like the auto trade take the trade and set where the estimation on every single trade is a different target, depends on the market movement. And usually, as an example, this auto trade will land right there, and it can be adjusted automatically by itself if the market is trending or not. Also, the optional on this kind of auto trade, you let the auto trade take the signal from the market analyzer, and you can, as an example, secure some of the profit manually or extend the target manually if you want to. And then the auto trade, once it comes into your trailing stop, readjust itself to the fib line. If you don't want to mess with it, let's say you keep it here. If the auto trade as you see now, the auto trade is moving the target. If the trend is strong, the auto trade adjusts itself and extend the target automatically. Even if you fuzzle with the as an example here, the NASDAQ, we still have 1 trade, and you want to secure some of the profit, and you want the auto trade to stay on that trade. You can extend it yourself if you want to, or you can leave it and the auto trade will do it for you. And when the fib line come into your trailing stop, it's going to readjust itself to the fib line automatically if you are busy. So this is a very good advanced trading. Also, if we notice on any given chart, it tells you also there is some small signal for someone. If you wanted to use those information, it's telling you there is a long, short trade, short trade, short trade, short trade. So there is a signal also for the ones they enjoy a little bit of the manual trade, or if they wanted to close a trade, can give you the signal telling you that maybe you need to consider close your trade. Here is another one I would like to show you. There is a signal telling you to go short, telling you to go short, telling you to go long, long, short, and you can take a profit. The same story on any given instrument. So this is a really advantage, and you don't have too much indicators in there, and it's a very clean because you are trading between the fibs. So this is a really it is a very easy to manage when you keep your eye on the market analyzer, and you can control all the auto trade in one shot, and you can secure some of the profit if you want. You can use a trailing stop, or you can put them on a fib to another, and you just keep your eye on them, and you let them do the work. So this is all those trades here. They are coming from the market analyzer. Also, there is 5 different entries. As an example, on the pullback re-entry from the fib line, the auto trade can activate the trade. So there is many is easy to handle, does not also require optimization, and you can use any different type frame. You can use 1 minute, 2 minutes, 3 minutes, 5 minutes range, whatever your magic number is, and you can keep everything on one screen, and then you can see the pressure from the market analyzer, and giving you in details what is your entry price, re-entry, what number you need to reverse, your target estimation, how many ticks based on the last entry signal, and this is based on one contract, and it gives you the long time and dates as well. So everything in this market analyzer, you can see all the instruments, and you can see when there is weakness or when the instruments are not synchronized with each other. As an example, the ES, Nasdaq, Dow Jones, they are on the same direction, indicating the market is taking one direction. Let's say if the Nasdaq going to the opposite direction, that indicates there is confusion in the market, and most likely you're going to be in trouble. So this is also to keep your eye on it. It is and keep your eye on the instruments, what the gold is doing, what the 30-year Treasury bond is doing. As an example here, the 30-year Treasury bond is working perfectly against direction, against the ES. This is the way it's supposed to be. The 30-year Treasury bond has to go the opposite direction of the ES. Sometimes you see the 30-year Treasury bond going on the same direction of the ES, and this is the biggest trap when you are auto trading. Even a normal auto trade is irrelevant. As an example, those kind of auto trade, whether you are scalping the market or you are swing trading the market, in those conditions can cause confusion, and it can cause losses if the market is not in sequence. So this is a very good instrument to have your eye on it when the market's open. What is the pressure? Which instruments are not doing well? Because it will have an impact on any given instruments you are auto trading. We say thank you very much, and I wish you a pleasant day for the rest of the day. Thank you. Bye for now.